Hello everyone. This presentation focuses mainly on the qualitative factors in capital budgeting. As we all know, that capital budgeting is a part of investment decision wherein the company plans to invest the procured funds in some project that will fetch profits or high rate of return. These procured funds are either invested in long-term assets or short-term assets. When these funds are invested in short-term assets, they call it as working capital, whereas if invested in long-term, it's called as capital budgeting. So let's go to the definition of capital budgeting. Capital budgeting is the process of making investment decision in fixed assets or capital expenditure. Capital expenditure is that large expenditure including the purchase of fixed assets like land and building, new equipments, rebuilding or replacing existing equipment, research and development. The large amounts spent for these types of projects are known as capital expenditure. Capital budgeting is also known as investment, decision making, planning of capital acquisition, planning and analysis of capital expenditure. As I said, that is to invest on assets of long term value. Let's move on to the qualitative factors in capital budgeting. So let's take up the first qualitative factor, that is competition related qualitative factor. These are the factors which may affect the cash flow that is generated from the capital budgeting. This is due to the competitors' unanticipated actions, such as cost reduction by inventing new production process or unwarned exit of competitors from market. So what exactly does this mean? We'll try to understand with an example. Suppose a car manufacturer wants to purchase a new equipment which can help the company to increase the production from 50 cars per month to 80 cars. But while accepting this investment, looking at the outstanding quantitative result, they heard that a big competitor will go out or will exit from the market, which may increase the demand on their cars to 150 cars per month, which eventually lead the managers to reject the investment. Because even if quantitative results generated by investments are positive, sometimes considering these factors outweigh the quantitative results. Moving on to the next factor, that is project specific qualitative factor. These are the factors directly related to the success or failure in the execution, such as execution time schedule issues, the availability, the prices of execution resources and materials. Also, they relate to the results generated in the capital budgeting project. These are the human errors done by managers in estimating the cash flow or discount rates that are needed to be considered in capital budgeting decision due to their high importance in success or failure of any budgeting project. Thus, ignoring this type of factors by managers may lead to serious issues within capital budgeting projects and finally cause failure in generating the expected results. For example, a company wants to expand its production capabilities by building a new production plant. But while accepting the investment, a crisis in cement and steel sector started and caused a big rise in material prices, which can affect all of its projections of cash flow and that lead the managers to finally reject the investment. The next factor we have is standalone qualitative factor. Standalone qualitative factor are the factors that are related to capital budgeting project when it is isolated from other assets and projects and assessed separately. The operation among different or separate assets reduce risk and issues due to diversification. Therefore, considering this qualitative factor is low. An example for this type of factor is when an investor wants to invest all his money or savings in stocks of a big company and finally prefer to distribute his money on buying stocks from different companies. This is all to reduce the risk of losing. Moving on to the international risk related factor. Even when multinational companies that operate in foreign market have great opportunity to engage in market expansion or direct investment, it comes with a number of unanticipated risks. Thus, this factor is important as there are three main risks associated with international capital budgeting. They are economic instability, especially when it is related to inflation, political risk and fluctuation of exchange rates. In this case, due to high risk and complications, decision makers tend to accept the investment when they only promise high rate of return. This is just to justify their decision. The next factor is market related factor. This takes into consideration the market risk, that is, the macroeconomic factors affecting the market operations. Factors like instability of economic growth, high inflation, and the changes in interest rates. These can impact any capital budgeting effect due to its effect on the level of risk aversion of decision makers. Unstable macroeconomic factors lead to higher market risk in capital budgeting and need to be seriously taken into account within the decision making process. Lastly, the industry specific factors. So these comes with risk factor again. So these affect the whole industry sector in which the business is operating. These are the risks such as sudden changes in regulation promoted by an accident or enforced by government. Technological breakthroughs and scientific advancements can significantly increase the risk of any capital budgeting decisions. So, this was all about the qualitative factors in capital budgeting. Thank you so much.